Well, 2024 started off with even more drama than we thought we were going to get this year. I mean, we had a terrible earnings call, followed by Elon's pay getting nullified, and yet once again, more price cuts. To be clear, none of this works in our favor as shareholders, but there is a hidden impact that I personally have not heard anyone else talk about. So let's discuss all this today, what those impacts are, and how it affects Tesla stock. Just make sure you like the video if you like getting the truth without the hype. I know Tesla is one of those things to where a lot of hype exists out there, but you guys come here for the truth, so that's exactly what I'm going to give you, whether it's good or bad, you're going to get it here. And make sure you check out the pinned comment down there for my new channel where we talk about financial freedom and retiring early. It's the pinned comment. Check it out if you want content about that specifically. All right, so let's go through these issues one by one because each one of them kind of creates the impact to Tesla stock overall that we have to talk about, guys, because you have to understand it if you own Tesla stock. So let's talk about each one first. The first one, disaster earnings call number 2. Look, guys, I have to be honest. This is the second earnings call in a row that was just honestly a disaster. I'm not even talking about the numbers, which weren't that great. I'm talking about how the call was handled, how Elon and the management team handled questions, their specific answers to those questions, and kind of everything around it. There just wasn't a whole lot of positive. There's a way to kind of say things and kind of, I won't say spin it, but kind of create a more positive narrative around it, or at least acknowledge problems that are happening right now, but kind of give future outlooks. And they kind of refuse to take on anything head on this time around, and instead just kind of talk very big picture, very, I don't know, just really didn't give us a good feeling as a shareholder that, hey, don't worry about what's going on with Tesla right now. We've got this in the bag. We're navigating this time right now that is difficult, and we're going to come out even better on the end. We just didn't get that with that earnings call. And that was the second earnings call in a row where it was kind of that way. I know we've talked about it before, so I'm not going to belabor the point, but it was not a great earnings call, and it was the second earnings call in a row that was bad. So that right there is the first one. Number 2 is Elon's pay package. All right, I'm going to be careful with this one right here. I know it sparked a lot of controversy here on YouTube. Obviously, in my group, we were having discussions about it all the time, which make sure you take advantage of the Valentine's Day sale. It does end on Wednesday for my group where we discuss things like this. You can ask me in real time. I can give obviously opinions on there that I can't give here on YouTube and a lot of other things like that. So check out the pinned comment down there because monthly memberships are going away. So take advantage of that Valentine's Day sale if you want to be a member of my group. Anyways, I'm going to stick to just basically the facts here that I've been able to gather so far. Let me be very, very, very clear and upfront. I did not agree with the decision to cut his pay package, despite the fact that I kind of understand why the decision was handed down, especially when you start actually looking into the actual numbers, what the law says and everything else. And I got help for this, guys. I'm not a lawyer, but I reached out to other attorneys, especially attorneys who work in this particular field. And they all said the way the laws are structured out there in Delaware, there was a lot of things that Tesla could have brought in regards to defending the pay package. And their arguments just weren't that strong. That right there was kind of the first piece that they told me. The second piece, and it was kind of the more important piece, was the fact that everybody knew that pay packages were going to get scrutinized a lot more. And all it was going to take was just a shareholder bringing a lawsuit like this, and it was not going to go well. There's a reason why a whole lot of CEOs took, 20%, 30%, 40% pay cuts over the past couple of years. And that is to basically comply with how these laws are going to be basically put on these companies. Now, again, I can't get into the specifics. A lot of this talk is well over my head here. So I'm just relaying what was relayed to me from attorneys who actually specialize in this field. But that right there is kind of what I was told. And they were actually not surprised that the ruling went against Elon. They were actually surprised that it didn't happen a lot earlier, given how much pressure has been on CEO pay in the past. So even though I disagree with the decision personally, I also can't say that it does not weigh on the stock itself and obviously on everybody else involved. And number 3 is yet more price cuts. Now, we should have known this was coming because on the last earnings call, he would not commit to no more price cuts. So we kind of knew more price cuts were cutting. Now, I understand exactly why they're doing it. I still agree that it's a great strategy long-term, but I can't disagree with the fact that in the short term, it is absolutely continuing to hurt margins. And that's just a fact of life. And unfortunately, when you hurt your margins in the short term, that sets you up for a very, very bad scenario in the short term in regards to your earnings and everything else. Now, can Elon pull a rabbit out of the hat? Of course, he's done it before. Maybe they're able to find efficiencies other places. Maybe there's some other, tricks and, other things that they can use in order to do that. But I don't know about any of that sort of stuff. I can just look at the reality of what's happening right now. And that is we're getting more price cuts which means we're going to see margins go down even further. Now, that doesn't mean that I'm worried about their margins looking anything like Ford's or anybody else. They're light years ahead of all those other companies out there, all legacy auto. I'm not even worried about that. But it doesn't mean that in the short term, we're not going to see those margins come down. And I know the margins are still incredible, but when you go from super duper incredible down to just really, really great, it still is going to weigh on the company and on the stock more importantly. So let's kind of talk about what the impacts are to all of these things going on right now to Tesla stock. And actually, to be honest with you guys, there are actually two massive impacts. One of them is extremely positive. One of them is extremely negative. So let's talk about both of those next. So first, let's get the negative out of the way. And that is, I think we are in for more of a beating. Look, whether we like it or not, earnings erosion is probably going to happen. And that means more downward pressure on Tesla stock, especially as the valuation continues to drop because of that earnings erosion. Now, maybe things improve second half of the year. I agree with that completely. But right now, we've got to deal with current earnings, and the next couple of quarters are probably going to be rough unless something is announced that is big time and is going to start production or is going to be here in the very near future. Not things that are, 3 years away, 4 years away, 5 years away. Things that are going to impact right now over the next couple of quarters. If we don't have something like that, unfortunately, it's going to put a lot of downward pressure on Tesla stock. I agree, Cybertruck is here, and we'll see what it does, and I think it's obviously going to sell. But even Elon said, hey, it's not going to make money at first. It's going to be a draw. It's going to lose money essentially right now as they continue to ramp up. So, and again, they wouldn't really commit to a timeline in terms of when that switch is going to flip to positive. So that means it could be, obviously, I don't think it's going to be the next couple of quarters. It's going to be end of the year at the earliest, maybe into the next year before Cybertruck starts to actually print money that will help kind of turn this around a little bit. So again, that means more pain in the short term for Tesla stock. And I know Wall Street does not look forward, and that's just part of this game that we have here with the stock market. They care about the next quarter, maybe the next 2 quarters. And right now, I can't say that any of these things are not going to impact negatively over that time frame right there, which is the reason why I'm saying the negative impact is going to be massive in regards to earnings, which of course you guys know that's what I care about. I care about earnings and profitability, and both of those are going to take a hit over the next couple of quarters. Now, I understand the long-term vision of it, but it doesn't matter whether I understand that or not. What matters is what Wall Street is going to do to it, and unfortunately, that's the scenario we're in right now. But there is a massive positive to this as well, so let's talk about that next. Now, this is exactly what Tesla stock is. It is a roller coaster. And we know it. You guys that have been around and own this stock for any length, that if you own it for the past 2, 3, 4, 5 years, you guys know this roller coaster has huge ups, huge downs. But there's a difference between some of the ups and some of the downs. And some of the ups, like those hype runs at the end of 2021, guess what? You got eaten alive during that time, and you still are nowhere near positive on those shares you're buying there. And even when you come down off of some of those sorts of runs, you still don't make a lot of money if you're buying in during that time. And that's simply because the hype run ran up and it gets utterly ridiculous, and it takes a while just to get back down to fair value, much less undervalued again. But having said that, runs on the stock, big runs on the stock, after it has been disproportionately beaten down and then has great earnings on the other side and has a massive run up, has made you a lot of money every single time without that downside risk like you had buying those hype runs and then the crash down after those hype runs. And remember, over the course of Tesla's history, the past 3 or 4 years, there have been a lot of massive moves up and then massive moves down during that time frame. And look no further than just the beginning of last year. Think about that. The beginning of last year, you were buying Tesla stock at around $100 per share, a little bit above that. And you are still up over 80%, depending upon when you bought, how much you bought, you're still up more than 80% on those shares themselves. So yes, it cratered down. Yes, it had a massive run up, and yes, it's come back down again. But whenever you have these epic beatdowns of the stock, and then all of a sudden Tesla performs underneath while these beatdowns are happening, and then Wall Street kind of gets out of their own head, or they start basically recognizing the earnings are great again, you get huge runs on the other side of the stock that run up enough to protect you from another downtrend. And it looks like we are setting up for that exact scenario again over the next couple of quarters. Because I know everything that's going on right now is temporary. I believe they're going to fix his pay. They're going to figure that out, and it's going to obviously probably save us money as shareholders. They're going to figure out how to improve those margins in the future, and this is something they're doing temporarily in order to handle the much more macro environment and the more cyclical nature of the car business itself. along with all the other things that are picking up steam during this downtime that aren't necessarily printing money right now, but are going to print money in the future as well. So I hope over the next couple of quarters, Wall Street gets incredibly dumb, because I'm going to be gobbling up shares and enjoy the next run that's not based on hype, not based on, now it will get there, don't get me wrong, it will get there. But the initial run up in terms of buying shares and then having shares be well protected by a really nice run up, I'm going to be able to justify a good part of that run based upon earnings before it gets into that hypey type territory, which kind of seems to be when everybody decides to pile back into Tesla stock again. So for me, that is a massive positive, because we might get 2 straight years where we get this exact scenario played out, where we are able to add shares of Tesla stock on the cheap because of some short-term issues that arise, or Wall Street getting dumb in addition to those short-term issues, where we can make a lot of money on the back end once Tesla gets through this. And remember, if you want to see my buy alerts on Tesla in real time, because it's very possible they are coming, along with take 5 courses for free, use our stock analyzer tool for free, be a part of the best 6, 7, and 8-figure Discord out there, and so much more, make sure you check out the pinned comment, guys, and see if a membership's right for you. And click this video here if you want to see exactly what I'm buying in this market, and click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.